important updates to the VA loan assumption process on this episode of Major Money Matters. Welcome to Major Money Matters, and we got some important updates on the VA loan assumption process. And if you are a realtor or if you are a veteran, you need to listen to this because really interest rates are going higher right now. So I wanted to bring on my brother, fellow mortgage broker, Marian, talk about the recent circular that was released by the VA to address and give clarification to things that are regarding the VA loan assumption process because, hey, Marian, it's another rough day for interest rates.
It really is, man. I mean, you're in the corner, you're getting hit, you're cut, man. Everybody's yelling at you, get out the corner, get out the corner. You're like, I'm trying, he's hitting me, So
the interest rates feel back, man. It's painful. And as we continue to do this, or we continue to go down this route, even if rates start to drop a little, we got a ways to go to get to a point where it makes sense and everything. And as people did all of these refinances in 20 and 21, they have some pretty attractive interest rates at 2%, 2.25%, 2.5%, 2.75%. It's kind of hard to turn that down.
Really, it really is.
So I wanted to jump on. We were having a conversation about this and some questions that we're getting on VA home loan assumptions. And I wanted to jump on and just go over this because there's actually a video I did on my YouTube channel, 5 things you must know about VA home loan assumptions. If you have not watched that quick video, I really recommend you go back and listen to that. 5 quick things you should know. I'm gonna rehash some of those things. But this VA circular that came out really gives a lot more definition. And if you're a realtor that services veterans or whatever, I really recommend you take the 15 minutes or so to listen to this video because there's some important things we're going to cover that you really need to know about VA assumptions. So, Marian, anything you want to add before we get started here? Looking at this document here, this is going to be fun.
No, let's jump into it, man.
This is gonna be like you're a Baptist preacher, so
don't hold it against me.
No, I won't. So sometimes when you go to these churches, there's some churches, and I know I got a lot of Hispanic friends, white friends. If you have never been to a black church, why not? It is an experience. You really need to go. It is something you really should do. It's fun. It's amazing. It's amazing. But this is going to be kind of like that, where somebody starts reading. Some of these churches, it's like the preacher don't read the Bible himself. You have somebody else reading, and then when he gets to a part he want to expound on, what did it say? What did it say, Aaron?
Stop right there. Stop right there.
Stop right there. And then he goes and expounds, and then he says, ready, read. He keeps going. This is going to be kind of like that.
And sometimes they'll say, read it again.
Read it again. Say it again. Let's jump into this. Okay, so on a serious note, this is exactly from the VA. Okay, so this was put out in May of 2022. Okay, this is the VA assumption updates, and there are actually some things that they expound on, and they change the timelines a little bit that are different from the VA Lender's Handbook. So we're going to dig into this and start taking a look at
just a quick correction. This is May 22nd, 2023. So this is just a few months old right here.
Correct. Absolutely. Did I say something wrong?
You said May of 2022.
Oh, my bad. That's why you're here. Keep me on track. Okay. All right, Marian, let's start looking through this and pull out some things that are actually highlights of things that people really, really need to be aware of.
Okay, so I'll start with the background. Is that all right?
That's good. That's good.
Okay, so the background, the VA statute is regulations require an assumption be approved if A, the loan is current, B, the assumer is contractually obligated to purchase the property and to assume full liability, and C, the assumer is creditworthy under VA's credit and underwriting standards.
The big point there, Marian, is that the loan is current. Now, there are some situations where the loan is allowed to be brought current through the proceeds of a divorce or something like that at closing. Okay, so sometimes that situation you're allowed to bring the loan current, but in normally you want that loan to be current in order for it to be eligible for a VA loan assumption. Okay, all right, let's go on.
So we'll go to 1A, holders or servicers with automatic authority. So loan holders or their authorized servicing agents with automatic authority shall process and decide assumption applications for loans they hold or service within 45 calendar days of receipt of a complete application.
All right, so two things I want to cover there. Number one, the servicer. Okay, so this is the person that you actually make the monthly payment to. That's who's servicing your loan. Okay, something that's Freedom Mortgage or whatever loan company is whatever loan company you make the payment to. That's who basically facilitates the process. Now, you and I, Marian, we do a lot of VA loans. So if somebody calls us and they have a question about the VA loan assumption process, will we take the time and answer that question, although we're not getting paid for it?
Absolutely.
Absolutely. Anytime a veteran is getting served is a great day for us. Okay, but we'll take the time to answer that question. But it's important for you to know you don't have someone in this process or a loan officer in this process that is walking you through this process. This is done by the servicer of the loan. The challenge is me and Marian, we are paid on a commission. Therefore, we don't get paid until you actually close. Okay? So we have a vested interest in you actually closing. The servicer, they are probably have people working there that are paid on salary. Salary, some of you guys work salary. You're just there so you don't get fired. You have no motivation or vested interest in this thing getting closed, which is why this takes a long time. So you're not working with a loan officer, you're working directly through the servicer. But man, the other part there is the servicer. It says that the assumption application for the loans they hold or service within 45 days. So they have to decide within 45 days. That means that this process is a 45-day process, right?
No. I knew you were throwing me the alley-oop, but I'm just like, no, this is not a 45-day process. I mean, no.
They said you got to decide. So they make a decision. The subsequent process of that decision is a whole nother conversation. I decided a year ago to lose 20 pounds. Haven't happened yet.
I didn't have a comment. I didn't want to, I know your weight can be a touchy subject, so I just went ahead. I just wanted you to go ahead and finish that one off yourself.
So this is decision in 45 days. And Marian, you know this. I was actually trying to do a VA home loan assumption on my own property in Hawaii. So, we were in escrow, I think like 33, 34 days, and the lender hadn't said anything. And we knew it was going to be another 2 to 3 months after they made the decision or after they approved the package. So it can be, kind of challenging. Now, you also can appeal this. The veteran has the right to appeal this. That appeal process can be another 30 days if the servicer says no. But I want to skip down to section C there, 1C there, Marian.
Okay, the assumption types. An assumption involves the transfer of ownership and release of liability of a VA guaranteed loan. An assumption may be processed with or without a substitution of entitlement.
So this goes on to explain the two types of, entitlement transfer: the assumption without a substitution of entitlement, and then assumption with a substitution of entitlement. So you actually can have a assumption with a substitution of entitlement, meaning that the buying veteran, they have entitlement and they can buy the property. If that happens, then the entitlement is transferred from the selling veteran over to the buying veterans. But the challenge becomes, and the caveats become, when you have, a non-veteran or a veteran who does not have entitlement, or a veteran or non-veteran who intends to use this property as an investment property. You actually can buy, you can actually can assume a VA loan as an investment property. That is actually legal for you to do. But in all of those cases, if you have a non-veteran, a veteran without enough entitlement, or if you have someone who plans to use that as an investment property and they're assuming that loan, what's the caveat there, Marian?
Well, the caveat is that entitlement still stays with the selling veteran.
And so you have certain risks associated with that. And Marian, I don't think you particularly come across this yet, but I have come across it where somebody assumed or somebody allowed somebody to assume their entitlement, whether it was 08, 09, 2010, they allowed somebody to assume their VA entitlement or their VA loan, and they kept their entitlement, and then the person defaults on the loan, and your entitlement is screwed up. That could really screw you up if they default on the loan, and that's on your entitlement until that individual sells that home or refinances that home. So if you're a veteran and you're talking about a non-veteran or something like that, any VA loan assumption, if you're a seller of a property and you have somebody who's like, assuming your loan, or you're having a conversation about somebody assuming your loan, if you are doing that and that person that entitlement is going to stay on your VA, I think that is absolutely insane. I think that is the very last thing you should do when you are selling your home and you're a veteran. So I would never, ever, ever do that if I'm actually selling my home without a substitution of entitlement. There's no way I'm doing it. All right, Marian, I want to skip on to page 2 here, paragraph E. We get some questions on this. It talks about a spousal release.
Okay, well, let's talk about spousal releases then. The VA does not require the servicer to complete an assumption to release a spouse whose entitlement is not encumbered by the VA guaranteed loan from liability to a loan if the request is made due to a decree to dissolve the marriage or a legal separation agreement awarding the property to the veteran whose entitlement is encumbered by the VA guaranteed loan. I felt like I just said a whole lot of stuff right there. Go ahead.
You said a lot of words. Let's break it apart, okay?
Yeah.
So what this is saying in common sense terms is, let's say you have somebody who is going through a divorce or a legal separation. First of all, if you're doing a spousal release, being that spouse is being released from that loan, then if that spouse is not a part of the, let's say you have a service member and a spouse, and the spouse is not a service member. If you do a release of a spousal release and that non-service member spouse is simply being released from that liability, and it's going to be placed on the service member himself, if you have like a divorce decree or separation agreement or something like that that says this is now going to be awarded to the service member. There's a form that you file to be released from the loan if you are listed on the loan also. So this is not an assumption. This is a spousal release. And obviously the VA found need to put it in there because there have been so many people confusing this with a loan assumption. And those are two different things. Also, if you have two service members and the service members are now divorcing or separating, the service member whose entitlement is not on that home, they can sign a release, a quit claim deed, and file the forms with the VA so that they can then transfer that entitlement totally, if they can release it from the the service member whose entitlement is not used up on that home. Okay. Now, if you bought a home, you get a split entitlement, and both of you use part of your entitlement on that home, you're going to have to refinance or something like that in order to release that liability. That's a whole different ballgame. But this gives explanation to a spousal release. Pretty cool. All right. So I want to skip to the next page, Marian, and let's go to page 3. Let's talk about the assumption procedures. And this probably is the most important thing that people need to understand about VA loans. And I'll read this because this is important. I want you to expound upon this, Marian, because we've seen some situations like this. As indicated above, assumption processing procedures differ based on the authority held by the loan holder or its authorized servicing agents. Can you expound upon what that says or what that is saying?
Well, I think you want a lot from me in this particular answer, but it's very simple. Different lenders are going to do things differently. If you're trying to do this with USAA, or if you're trying to do this with Navy Federal, or any other bank or lender that you can think about, those are just the two on the top of my head. Everybody is going to have a different standard for doing these VA loan assumptions.
You're right, and everybody's going to have different guidelines. I mean, we had a friend who was doing this, a fellow loan officer who was doing this on his property, and he was doing they were doing a VA loan assumption, and he comes to find out that the lender has a overlay of 41% DTI. And frankly, you can go up to 60, 70% DTI on a VA loan and still get approval. But that lender had an overlay. Sometimes you ask the question like, hey, can I do a HELOC to cover the difference? By the way, go back to my video that talks about five important things you must know about VA loans. It's on my YouTube channel. But, these are things that, people say, hey, can I do a HELOC or something? Yeah, maybe, but that's up to the lender. And they might say yes, they might say no. And different lenders might say two different answers to that. And frankly, the lender has the right to change their mind about their answer from 1 month to the other. So there is no rhyme or reason on this. They all have their reasons for how they do this. So let's skip to the bottom of the page, Marian, on number 5, paragraph 5. And it talks about the funding fee, okay, which is part of a VA loan if you're not exempt. But let's talk about the funding fee that you're doing here.
Okay, create an assumption funding fee record in the funding fee payment system, or what's abbreviated as the FFPS. Unless the assumer is eligible for a fee waiver, a funding fee of 0.5% of the loan balance must be paid on an assumption. Please note, this must be collected at close and may not be financed into the loan balance.
This is key. So it's important for you to understand this because in a regular VA loan, the funding fee is added into the loan. Okay? It can be added into the loan, and you don't really have to pay it out of pocket. When you're doing an assumption, the VA loan or the VA funding fee has to be paid at closing when you're doing a VA home loan assumption, along with multiple other fees that the servicer is allowed to charge. So that is definitely something we should keep in mind when we're advising people about this VA home loan assumptions thing. All right, let's get to the next page, Marian, and we're going to wrap up here with this last point that we want to bring up about the process of when you do a VA loan, the process of then buying again after you've transitioned your VA loan to another buyer. Let's say you're transitioning your entitlement over to that new buyer and you want to buy again. So you're moving from one place to the other and you want to just go buy again because your entitlement changes over and you're thinking like on a purchase, you probably did this before, you sold your place and then you bought the next day because it doesn't take that long to restore an entitlement. You're fine as long as you restore your entitlement. But this is an assumption. And this is a different process. Let's look at paragraph number 7, Marian.
Submit the assumption package to VA. After an assumption is closed, the holder or its authorized servicing agent must submit the credit package and a copy of the executed deed and or assumption agreement to VA within 45 calendar days of loan closing.
So you just sold your house, you closed, VA home loan assumption, you transfer everything over. The lender has 45 days to transfer that or to send that documentation to the VA. So you're waiting 45 days potentially to get your entitlement restored. The VA then is going to receive that. They have a process in there, and people get frustrated with the VA, but at the end of the day, the VA is a government entity. Okay, so they're not in a hurry for anybody. Okay, so keep in mind they have a processing time also. So you shouldn't expect, and this is for you realtors out there. It's like, okay, cool, we're under contract. we're pending sale on this. We're going to go under contract on that next place because once we close on this, we can immediately close on that one because I've done this before. Veteran closes, and then you go, this is different. This is a whole different ballgame here. You can't expect to just quickly do this when you're doing an assumption. So, Marian, I mean, what are your general thoughts on the VA home loan assumption process? Because we get this question all the time. What are your general thoughts and general guidance for realtors and people who want to do this?
I just say for realtors, I have two things. One for the realtors watching, and that's, get this 10-day clear to close, this 14-day clear to close, 21, 30-day clear to close. Get those things out of your mind when you're talking about dealing with a VA loan assumption. Just completely get that out of your mind and pack a lunch, a tote bag, not even an overnight bag. Pack a big bag because you're going to be waiting 45 days at minimum, 60 days, 75 days to get through a VA loan assumption. And then my question for you, Major, is why would anyone want to do this?
Look, it's a true fact that the savings here can be astounding. Okay, if you're talking about as of today, VA rates in the mid sevens, as of today, the savings could be astounding if you're getting a property, especially in some places that if you're getting like a luxury property or something like that that's bought with a VA loan. And the savings here could be huge. And what I really want to encourage is people who, listing agents who just say, hey, you got a VA loan. Oh, you got a VA loan. It's assumable. Let's market that as being assumable. Look, do your due diligence for everyone. Call the lender. Have a conversation with the lender. How long is this process taking? How many of this are you guys doing a month? What does that process look like? Do you have any weird overlays or something like that somebody can't assume the VA loan or something like that? So have these conversations up front. I think if you just list it in the MLS that it's an assumable loan, that's irresponsible if you haven't done the work to really figure these things out on the listing side so you can present something to the buyer that's actually a usable product. So, if people want to do this because they save a lot, keep in mind, go back and watch my other video, you're assuming the loan, you're not assuming the purchase price. There's a delta between the loan amount and the purchase price, and you have to figure out a way to close that delta. Now, if you have cash on hand to close that delta, we're good, and it's a good day. And if you have to get strategic about a HELOC and all this other stuff, you need to check the lender, figure out whether you actually do that. So, Marian, hey, thanks for joining us on this, man. This has been fun. We talked through this thing and everything and figure out how we do this. By the way, if you guys have any other questions, reach out to Marian, reach out to me, and we can figure out how to help you, advise you through this process. See you guys next time on Major Money Matters.